What's going on, guys? Bexio back, and today we got a brand new video, this time on Bitcoin, talking about the adoption happening and continuing to move forward, and the underlying fundamentals that are much more important than the price action day to day that people, for some reason, always forget about. But first, if you are not subscribed, make sure to smash that sub button because we are on the road to 1,000 subscribers. But let's jump right into this Bitcoin news. We can start with the chart, start with this kind of little things going on in Bitcoin here. We see obviously the descending channel here and move up towards this top end, trying to break it, and then hopefully we can break it and continue moving forward. Like we said in the last time we talked about Bitcoin, the most important thing is going to be reclaiming the $1 trillion market cap, but the first step was getting over 50,000, which we are all around $51,000 right now, and this line would put it at a 52.5 about today, and then tomorrow 51,800, 900 ish. So we might be able to trade sideways out of this descending channel here and jump up. But like I was saying in the beginning, fundamentals are way more important, and like doing charts like this and trying to look at short-term moves is fun. I don't trade off of it. I do it for fun, and it kind of gives you an overall look a little bit, but it's all mostly for fun. And just right before we hop into all of the big adoption things that are charted out, we're going to look at the liquidations here. So this was the massive problem that caused everything. This candle right here at over $2 billion in longs liquidated, that obviously sent the price flying down, and we're kind of getting what I thought was going to happen, which this section leading up was very similar to this section that happened after a major liquidation. So it was kind of mirrored, and right now we're pretty much seeing that, where the liquidations already happened and they're super down already. 170 million to 175, down to 62, down to 19 million. That's today. So today around 59 million. So obviously moving in the right direction. The longs flushed out, a much needed flush to happen to keep the market healthy. This has to happen, and people overreact to it every single time that it does end up happening. And you already know, we gotta look at the hash rate and look at that spike, massive spike up in hash rate. So if this continues to be a reliable short-term indicator, then maybe we see the price really rally quickly back up to probably the 60,000. So the hash rate, something probably close to all-time highs. Definitely, probably. So maybe around like 60K would be a decent target for this massive spike up in hash rate, if that's the case that we see here. Obviously, the hash rate hasn't been wrong. Even when it looks like it might be being wrong, it gets proven right, and it's crazy how it happens. But we'll be watching that. And then right here, this is the article. This is a tweet of the article that has all of these charts on it for the adoption of crypto and Bitcoin. You can see over the last 6 months, the percent of the Gen Pop who invest in cryptocurrency or what if they could as a long-term growth investment jumped from 23% to 30%, while those who invest to avoid adverse economic conditions, inflation, things like that, bad monetary policy, has risen from 9% to 16%. Those charts are in here. You can see this right here is the first big chart. You can see these different lines. So this green one is long-term investment, like that's how they view it, up from this is June, so basically the summer to now, from 23% to 30% are going long-term as investors. Short-term is dropping from 27% to 21%. This easy, fast, and safe transaction, so kind of the technology aspect of it, is actually up from this like 9%. It's all jumbled here. It's around 9% to this 15%. So that's crazy. Even just the technology part of Bitcoin is increasing. That just shows you how strong the adoption is. And these short-term moves, you shouldn't be looking to them to kind of judge what's going on in Bitcoin. You got to look at the fundamentals of people using it, account growth. You can look at different categories like people called shrimps with zero point 0.1 Bitcoin or less. They continue to stack. They never sold down. So you just got to look deeper in than just the price action. This one here, you can see independence from government involvement is actually down from 18% to 10%. And that's to be expected because we're starting to get hedge funds companies in who aren't necessarily super worried about government involvement because they obviously have their own business and they're trying to do it for business reasons. But not too shocking with that. And then to hedge against inflation and things up from this 9% to 16%. Like I said in the tweet, absolutely massive numbers. And then you see these numbers as well. Not interested at all in crypto from May was 80%, and then it's down to 68. And then the adverse of that, somewhat or very interested, from 20% to 32%. So the people who are not interested at all declining, people who are interested at least a little bit increasing. So everything is adoption moving forward with crypto is happening. And then you see this starting to creep up as well. You see, if you had the means and ability to invest your money in an asset, would you be more likely to invest in traditional stocks or cryptocurrencies? Traditional 76 and then 24. So obviously crypto is still a massive underlying there. Traditional stocks still like the massive big player, and that's where the most of the money is. But you see the generational shift coming where it's going to move from traditional stocks to cryptos and to Bitcoin, Ethereum. Those are going to be like the new blue chip stocks and blue chip currencies. And it's all moving towards that type of thing. And I think over time, we're going to see this really move down. And you can see where it started from. So this is like what it is now, the data. And then it started from 90 down to 76. And then 10% up to 24%. So it's ridiculous numbers. So if you wanted to kind of manipulate data a little bit here, you could see this 10% to 24%. And you could say it would be what, 100 and something percent increase in interest in crypto. So if you wanted to make a really bangy headline and someone be like, wow, that's crazy, you could say there's been 100% increase in crypto interest over the last year. And you can see just how you can kind of manipulate the little data to get headlines you want. And then this is actually kind of crazy. 7% say they have sold stocks or bonds to buy crypto. 16% they know someone who has done that. And 77% say not at all. So those are probably the bigger players with a lot more money in stocks and things. But this is a lot more than I would have thought, people selling out of the stock market to getting into crypto. But I guess it makes sense. So this is the last chart on here, but it's pretty interesting to kind of single out Elon Musk and Warren. But I don't know why Warren, but I don't think he has a say in anything in crypto. But Elon, his tweets obviously have moved markets, but saying to what extent are you concerned about the value of various cryptos being inflated or deflated due to statements made by high-profile public figures. So just by that statement, that is a problem for lots of things other than Bitcoin and maybe Ethereum. Like we saw Bitcoin get rallied by, there was massive fear. Tesla stopped accepting it. Elon Musk came after it. China FUD. China kicked out miners. All of the things hit it all at once, fell 50%, but it came back and rallied and made a new all-time high without any of them. You compare that to Dogecoin that had all-time highs like 70 cents. The crash happened and it fell, and it's around where it fell to. It fell like 15 cents. It's around 17 right now. So it didn't recover. So when you have these like figureheads, that's your problem and point of failure for anything. But looking at these numbers, what do they say? Not concerned, not at all concerned, went from 54 to 51. So not really a change there. Somewhat concerned, 26 to 31. And then very concerned actually dropped. So I'm guessing very concerned dropped because they made money off of whatever they said, and somewhat concerned going up because they might have missed the pumps or something and were upset about it. But interesting-ish numbers here, and just kind of point out the problems with coins that have figureheads. And if the hype dies, it's very, very hard to get that hype back. And if you didn't have reason enough to want to hedge with Bitcoin, you can see right here, Congress considering raising the debt ceiling by $2 trillion. from CNBC. That is massive, massive numbers. And we just got to start thinking to ourselves, when does this get to be too much? But that's like the underlying kind of fundamentals of Bitcoin. A lot of data coming out of, the growth of Bitcoin and crypto, the adoption continuing to happen regardless of price moves. So if you're fixated on the short-term price moves, you're fixated on the wrong thing. But that's going to do it for this video. As always, guys, don't forget to smash that like button and subscribe. We're on the road to 1,000 subscribers. See you guys in my next video.